What's up YouTube? Dougie Chong here. Welcome to today's episode where we're going to be reviewing Lululemon stock, ticker symbol LULU. In this video, I'm going to be talking about whether I think Lululemon stock is a buy or if I'm staying on the sidelines. Before we get into it, be sure to smash that like button and hit subscribe. It really helps out with the YouTube algorithm. Alright, let's talk about what this business is before we talk about the stock itself. Lululemon is a premium apparel company for running, training, and general sweaty pursuits for both women and men, as well as accessories and footwear. They sell through company-related stores, outlets, e-commerce through Lululemon.com, and their apps, wholesale relationships with gyms and studios, as well as other temporary licensed locations. The company was founded in 1998 in Vancouver, and it is now a premium athleisure brand with hundreds of stores across North America, Europe, and Asia. So this is not just yoga pants anymore, it is a premium athleisure brand that competes with big companies such as Nike and Adidas. Let's hit the numbers on the screen right now. As of today, Lulu is trading around $115 per share. That gives the company a market cap of roughly $15 billion. So we're talking about a mid-teens billion-dollar business, not a tiny small cap. From a shareholder return standpoint, this is not an income stock. The dividend yield is essentially 0%, so Lululemon is not paying you cash every quarter. This is a growth and capital appreciation story. If you're looking for yield, this is probably not your name. Now, valuation time. This is where things get interesting. On a price to sales basis, Lulu trades at about 1.47, which is not crazy for an apparel-based company, but definitely not deep value either. The headline PE ratio is actually negative, around negative 7.4, so this tells you that the company actually dipped in the red and they're actually not too profitable right now. If we look at the enterprise value to EBITDA ratio, it's at about 426, which is an eye-popping number. That screams that the EBITDA is very small or distorted, so you can't just look at that number and say the company is fairly valued. On the cash side, free cash flow is under 1%, it's about 0.8%, so it's not cheap on a cash flow basis either. Bottom line, on the traditional metrics like PE ratio, EV to EBITDA ratio, this is not a bargain bin value stock right now. Now let's talk about the most recent earnings, because this is where the sentiment really moves. The latest fully released quarter we have is Q4 of 2026, and the most recent earnings with callback is March 17th, 2026. In that quarter, Lululemon delivered about $3.6 billion of revenue, beating Wall Street's estimates of $3.5 billion. On the bottom line, they printed 5.01 for earnings per share, versus an estimated 4.74, so there's a solid beat there as well. So fundamentally, the last call we heard from management was not a disaster. They actually beat most analysts on both revenue and earnings. The flip side to this is that investors are clearly recalibrating what they're willing to pay for this story. Let's zoom out and think about business quality versus the current financial standpoint. On the plus side, Lululemon has a strong premium brand in the athleisure space with customers willing to buy their products. It has a diversified channel mix, stores, outlets, digital, as well as wholesale relationships, and international growth potential as they expand more into Asia and Europe. On the risk side, we have a macro environment where discretionary spending can get hit, especially in high-ticket apparel items, intense competition from big companies such as Nike and Adidas, and an army of up-and-coming others such as Gymshark, and valuation metrics that just look very messy, from negative PE ratios to a low EV to EBITDA ratio, as well as a very low free cash flow, less than 1%. So you've got a very strong brand, but the financials aren't exactly screaming a buy right now. Alright, this is the part everyone skips to. Is Lululemon a buy in my opinion or not? Given the numbers today with the stock around $115, as well as the negative 7.4 trailing PE ratio and the low 0.8 free cash flow, I would not say it's a buy right here, right now. For me, this looks more like a watch list stock. Great brand, decent recent revenue and earnings beat on the latest earnings call, but valuation and cash generation need to look cleaner before I get aggressive. It is down massively since its highs of about $500. Also, Michael Berry, the famous hedge fund investor who called the 2008 financial crisis crash, he's been loading up on Lululemon stock recently. Personally, from the start, I've seen a lot of women enjoy this company, but now a lot of men are also trying different products such as their pants. I personally cannot justify their high price tags. If you're a long-term believer in the brand and you can stomach some volatility, nibbling a bit on the pullbacks might make sense for you. This is just my personal opinion based on the data and the current risk/reward. Also, I post all my buys and sells in my Instagram account, Dougie Finance. Please follow there if you haven't already. And super important, I am not a licensed financial advisor. This video is for entertainment purposes only. It is not legal or financial advice. Always do your own research and consult a professional before making your own trades. That's it for this video, guys. If you got any value from this breakdown of Lululemon stock, please smash that like button and hit subscribe. It really helps out the YouTube algorithm. Drop your thoughts on Lulu stock in the comments below. Is it a buy? Are you holding? Are you selling? Let me know your thesis. Thank you all so much for watching. I appreciate each and every one of you. Enjoy the rest of your day and see you in the next video.